Great. So happy to have you all here and welcome to Vertiseit Capital Markets Day 2024. And my name is Johan Lind. I'm the CEO and one of the founders of the company. And with me today I have...
I'm Jonas Lagerqvist. I'm a Deputy CEO and CFO of Vertiseit.
So almost three years ago, we actually had the last Capital Markets Day. And today we will review the goal fulfillment, of course, for the previous period. But most important is that we will present new goals going forward. And also we will dig into our strategies on how to get there. And Jonas, will you guide us through the agenda of the day?
Yes, we will start with an introduction and review of our goal fulfillment since the period that we've been a public company. Then we will have a presentation from Ann Hjelte, CEO of Grassfish, and Sebastian Kry, CEO of Dice. We will have a short lunch break. And after that, we will present our updated strategies. Damien Sherley from our partner JLS is here. We will host a presentation after lunch. And then we will introduce and present our new long-term goals. And after that, we will finish off with a Q&A, which will be hosted by Charlotte Stjerngren, who is with us here today. There she is. Everyone is more than welcome to ask questions along the presentations. And if you would like to save them for later, you can always ask them in connection with the Q&A. And we're also streaming this event so that the people watching live can also submit their questions for the Q&A sessions. And if you have questions, send an email to investor@vertiseit.com.
Great. Sorry. So at Vertiseit, we have a vision to connect the world of retail. And we want to become the #1 platform company for in-store experience management. And then you need to think about like why? What's the purpose of having an in-store experience management platform, and what is the demand? And there is a lot of challenges that global brands, leading retailers face to bridge the gap between meeting a customer online and meeting them in person in a retail setting and throughout the customer journey. And what we try to solve is really how we bridge the gap between those channels. So how can we facilitate a seamless brand experience, a seamless customer journey? And the core of our offering is the in-store experience management platform to enable this. So if you go into a modern retail concept, there might be a lot of digital touch point that is even hard to notice. Like if in this picture, for example, it's the Volvo showroom in Kungsträdgården in Sweden, and there might be like 20 different digital touch points with specific purposes. It's digital price tags next to the car that is fully data-driven. It's brand walls where they launch the latest campaigns and create the right ambience and atmosphere. It's even the ceiling is actually changes throughout the day. And there is a lot of handheld devices to facilitate sales support for the customer journey that often starts in the sofa at home. And there is touch displays where you can explore and deep dive into the service offering, for example. To be able to orchestrate this, in one place, but also like on a global scale, you need a professional platform. And it's also that like the industry started what we called digital signage. It was more of like a siloed experience where you scheduled content into displays. But now, as digital in-store becomes so much more integrated into both the digital ecosystem of the customer and facilitate everything from brand to transaction, then it's a completely different game. And that's the position we want to have. So we want to be the global #1 platform company for in-store experience management. And the group now have 2 platform offerings. And we will hear more and learn more today from Anne, from Sebastian, that run those companies. So it's Grassfish, which is an enterprise-grade platform for global brands, leading retailers, where we offer platform and consultancy services. It's an offering where we work together with partners. It's highly customizable, but also requires a lot of consultancy expertise to implement. It's Dice that, on the other hand, is a pure SaaS offerings sold through well-selected partners. We want to have like one of the top full service providers on each market. And it's really intuitive, easy to use platform with a lot of like capabilities where the partner can use the API and to adapt and build stuff on top of the platform. And just to give you a little bit of an understanding of how it actually works behind the scenes before we start off. So both platforms is in-store experience management platforms. In Dice case, the partner take care of everything from building the strategy, designing the concept, integrate it into data capabilities of the customer, designing the experiences, and also, of course, deploying the digital in-store equipment that is needed. And with Grassfish, we offer the platform, but in complex, in many times global projects, we also offer expertise to fill the gaps where many parties are involved. So let's say if it's BMW is a customer of ours, there might be five different partners involved in a global project. And those partners work side by side. So that's one of the core differentiator between the offerings. And as you're all aware, like we don't only work in traditional retail. We work in all verticals where there is a customer meeting to facilitate. So everything from retail banking, electronics, automotive, grocery, convenience. Like there is a lot of verticals that actually can leverage from using digital in-store. We have more than 1,500 brands on our customer list. We operate 150,000 plus units, and we have 150 employees and have been in the business for many years now. Jonas, would you give us a dive into the financials?
Yes.
Performance so far?
Yes. So, Vertiseit has had strong ARR growth for many, many years. And the growth has come both from organic growth and also through selected acquisitions. So for more than 10 years, we've had a double-digit growth on an annual basis. And we've been able to perform this constantly during profitability. So if we just take a quick look into 2023, and I will also mention some highlights from the first quarter. So from an operational point of view, we ticked quite some boxes during the year. Both Grassfish and Dice signed a couple of new partners, which Anna and Sebastian will tell you a bit more about later. We invested heavily and made a real effort when it comes to internal structure and platform for future growth, meaning that we invested in a joint IT infrastructure, all the way from accounting and marketing and customer relations and license management and so on, which will facilitate our growth for many years to come. We also made a successful divestment in September of the ITS business, which is the intelligent transport solutions that we got through our MultiQ acquisition, but did not fit our strategy. So we sold that to a British listed company called Journeo, who is now instead our partner when it comes to ITS business. And in the third quarter, we managed to implement several measures for increased efficiency, which basically came from the fact that we did finalize our joint IT infrastructure and been able to realize many of the synergies from the recent acquisitions, which did increase both our profitability, our cash flow, and overall efficiency going forward. So for the year, we did grow our ARR with 17% from year to year, and also managed to accelerate that growth during the fourth quarter. So isolated in the fourth quarter, we had like an annual growth rate of 24% when it comes to ARR, annual recurring revenue. We managed to increase our profitability all through the year, ending in 24% in Q4, which is in line and on the path towards our 30%, which we aim to reach at the end of this year. The increased profitability and cash flow also led us to a stronger financial position, ending the year with a net debt of 114 million, which is a leverage of 1.9 in relation to EBITDA. And the net revenue retention was 109% during the year. And for those who are not fully familiar with that term, it basically means that we did manage to grow on our existing customers. So a majority of the growth actually comes from existing customers, which is a very strong sign of us being able to take care of the customers, keeping them happy, and creating value for them. So with today's report for the first quarter of 2024, we're now summarizing 49 quarters of straight ARR growth sequentially, quarter by quarter. Never managed to decrease a single quarter during this period, which is which is a tradition that we will cling on to as going forward. So in this, in this picture, we can see that there even in the challenging years during the pandemic, we actually managed to grow our ARR every quarter. And to achieve this, of course, this is a sign that we do have a solid business model, that we do manage to deliver value to our customers, and we do manage to keep them happy in order to stay with us for a long time.
Jonas, you have a question here? Yeah.
Yeah. Fredrik.
You mentioned EBITDA margin of 30%. Is that for the fourth quarter isolated or for the full year of 2024?
Fredrik, and didn't have a microphone, so I will repeat the question. The question was the goal of 30% EBITDA margin, if that is for the full year or for the fourth quarter. So in our current goals, which stretches until the end of this year, we shall reach an EBITDA margin of 30%, no later than the last quarter. So it's not for the full year. Looking at this, we have a strong ARR growth, like a compound annual growth rate exceeding 50% over this long period. But today we're happy to report for the first quarter, and from our point of view, we're quite satisfied with the outcome of the quarter, where we basically keep delivering in line with how we ended last year. Summarizing the ARR to 170 million at the end of the quarter, which is a growth rate year-over-year in fixed currencies of 18%. Profitability was also somewhat strengthened compared to the fourth quarter, meaning that we are on a profitability level of 25% during the quarter. And the increased profitability also gave a positive effect when it comes to cash flow. So free cash flow amounted to 22 million in the quarter, also resulting in a strengthened financial position. We're now on a leverage of 1.3 and a net debt of around 95 million. And the revenue retention, which is also part of our financial goals, we're also exceeding 100%, meaning that we keep growing on our existing customers. Evaluating the SaaS metrics can, of course, be a little bit tricky if you're not very interested. But important thing here is compared to the full year 2023, I can say that the growth rate is somewhat strengthened. The net revenue retention indicates that we keep growing on our existing customers. The churn rate, meaning that in which pace do customers discontinue with us, is on quite low levels. And the average revenue per brand is increasing, which is important due to the fact that we in order to increase our scalability, we do that by growing on our larger customers. So overall, we are really happy to report a good quarter where we are satisfied with at this moment. And we repeat the fact that we feel a strong momentum, which makes us maintaining our positive outlook.
Great, Jonas. Thanks so much. And now it's time to see, have we lived up to the goals that we have communicated before? And so I think we walk through them and take a quick review.
Yes.
And
so we
actually decided to start it off even with the IPO, because many of you that are here have been with us and have been investors even since we IPO'd in 2019. And when we decided to go public to get resources to actually perform on our acquisition agenda, we had 25 million in ARR, and we said that the goal is to go from 25 to 50. And it was like a straight line, basically, from where we were and from the history. And we managed to achieve that 18 months ahead of schedule due to the acquisition of Grassfish. And at the same time, we also, of course, got some of the global customer, which was the second goal, to actually get global customers where we also had global rollouts, and BMW, for example, or Porsche was some of those. And then we go to the Capital Markets Day.
Yes.
Almost 3 years ago,
Yeah.
right?
So as a result of the fulfillment of the IPO goals, we invited to a Capital Markets Day in 2021, where we communicated the updated goals that we are currently running under. So then we stated that by the end of 2024, we shall have an ARR exceeding 200 million. At the end of the period, during the period, we should have a growth rate of 25%. We should reach a profitability level of an EBITDA of 30% by the end of the period, and we shall always, during this period, have a net revenue retention exceeding 100%. So where are we now, Johan?
Yeah, so like we're on track. So when you can see like the dotted line, we're actually just above track when it comes to the ARR development. If we continue in the direction, we will meet the goal by the end of the year. That's what we aim for. When it comes to ARR growth, we have always exceeded, right? So the CAGR is
it's around 40%,
yeah.
as we include acquisitions in this growth number.
Yeah, and when it comes to profitability, when we started this period, our EBITDA level were like 14%. So to go from 14 to aiming for the 30, we have delivered like 2/3 on that goal. And I think the biggest improvement have been the last six months, more or less. And it's also when we have started to realize synergies throughout the group. So I think we are in a strong position there as well. And the revenue retention is, of course, the quality mark for our company. That always like a big portion of our growth is on existing customer base, and we have not even been close to that. So like we have always been way better than 100% on annual revenue retention, and I think that's something that is important. I think if you look at it like from an investor perspective as well, like how sticky is like the SaaS revenue. If you have like 50% churn in a company compared to where we actually deliver 50% of our growth is from existing customer base. It's so the type of revenue that we generate is really sticky, and we will get back to that, right?
Yeah, and so as overall we are trending in the right direction and are in line towards fulfilling the goals for this goal period, and would also like to emphasize that these goals will remain in force for the rest of the year, and the new goals that are presented will come into play starting 2025.
Yeah, and you see like the big gain that we actually had in ARR in the chart is, of course, the acquisition of MultiQ. And we haven't actually talked so much about the outcome of was it a good, was it a bad investment. And I think now we are in a position where we actually can at least give you some key features to look into. We have them here. Jonas, what's your take on this?
Yes, as we now have like fully integrated the acquisition, we've divested the parts that that did not align with our strategy. We can make like a first evaluation of it. So we did acquire 50 million in ARR, and if we summarize the ARR that we have from the customer accounts that actually was acquired at that time, and also, of course, reduced with the ones that we've divested. We can today summarize that we have an ARR from the same customers of 59 million, meaning that we've managed to have a quite substantial growth on that customer base, and for the people who did follow the company before we acquired them, that growth rate was not really there during that period. So when we do like a calculation of what we did pay and in relation to the ARR that we have from that acquisition today, we have a net acquisition multiple of about 3 times ARR, which we find very decent.
And it's also due to the divestment of ITS, of course, but that's included in the whole calculation. So when we made the decision, the multiple was actually 4, but the multiple now already is 3. And of course, the potential to continue to grow on this customer is still there. So it looks promising. Great. Then we come into like our building like a strong foundation and platform for growth going forward. And I think it has been a theme now for the last year because there has also been a lot of questions about like heavy investments that we actually have done into ERP shifts and so on. But I think it's important to actually state and talk a little bit about like what is it that we actually build and why do we build it. So starting from the why, like we see that if we should continue this journey for tens and tens of years to come, we need a solid foundation that we can grow with on a global scale. And part of that is that we build like a strong group culture. So on a group level, we work a lot with like harmonizing on both the culture, core values, but also on guiding principles on how we do business. So that's part of the foundation. We also work really hard on a joint management system, including everything from how we organize ourselves, roles, responsibilities, harmonized throughout the group. We work now with the certification on a group level that actually finished yesterday, where we have been ISO certified on different entities throughout the group. It's now on the group level, so we now comply with ISO 9001, 14001 for environmental, and also for information security management, which will be a requirement in more and more of like the big deals. So that's also in place. And of course, that supports the whole group, and it also relieves a lot of the work, so that Grassfish and Dice can focus on making the best customer experiences for their customers and partners. And then we have invested into platforms. So we now, for example, invested in Salesforce, which we use for market automation, for CRM, CPQ, for support, and we have a unified licensing system that manage all licenses. That enables the SaaS metrics that you now get in every report, that facilitate automatic invoicing of that, of course. And then Jonas on accounting and BI, you also...
Yeah, I mean, from acquisitions, we of course were in a situation with quite some ERP systems. Now everything is harmonized around like Microsoft Business Central in in all legal entities, making it like really smooth and easy to have like a full internal control and easy reporting. And on top of that, we have our BI platforms, which allows us to like instantly and every day being able to analyze and follow up on our KPIs, and also serves as the foundation for all our reporting needs, both internally and externally.
Great. So with that, we have the platform in place to continue to grow, both on other existing brands and also this is the blueprint when we will bring in new acquisitions, and we will get back to that a little bit further down the road. But now we will get to know both Grassfish and Dice, and really look forward to have Anne on stage that will present the Grassfish. She's the CEO. And Sebastian will come after, the CEO of Dice. But I think before that, we take just a 5-minute break and maybe grab a coffee or water, and back here in 5 minutes. Perfect.